Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the COO of EMP Metals, a lithium exploration and development company focused on large-scale direct lithium extraction assets in North America. It's Paul Schubach. Great to have you on the show.
Yeah, thanks for having me.
Yes, delighted to have you here. I want to start the conversation with your current thoughts on the lithium market, because we have seen quite a downturn in lithium prices along with the equities since 2022. It seems like the conversation on lithium is a little more muted now as well, which could be a great contrarian indicator. I'm just wondering what your thoughts are on the current state of the lithium market.
Yeah, I tend to agree with your comment. And again, I think there typically tends to be great opportunities, when things are fairly muted. I would like to highlight a few things, though, in terms of, some major signals that we're looking at in terms of lithium specifically. And I think the big one here is Rio Tinto recently, that announcement of them purchasing Arcadium. We very well could be at a bottom here, seeing some of these major transactions happening today. We also look at, some other things that are happening, specifically in the U.S. Lithium Americas, the Thacker Pass project, and that $2 billion loan from the U.S. Department of Energy, along with their JV with General Motors. Again, I think are all very positive things here as we talk about lithium specifically. And even on the DLE front as well, you look at some of the other announcements that have happened this year, Standard Lithium and the Equinor partnership. With their project there in Arkansas and the Smackover. Again, I think are very positive on the DLE space specifically. And then you've even got ExxonMobil that moved into the Arkansas area as well last year with the acquisition of the Galvanic project. So I think overall, we're starting to see things turn for lithium and more specifically DLE projects with some of those oil and gas majors moving into the space.
Well, walk us through the current supply demand setup for lithium as you see it. What do demand projections look like up ahead, and where is the majority of this lithium set to come from?
Yeah, so I think you see a variety of reports, out there today where, supply is being limited or reduced, some facilities being put into care and maintenance, either projects not moving ahead just due to that low pricing environment. And again, we see this as, good news for lithium investors. Supply being currently reduced today, but demand continuing to be expected to grow worldwide. Where we see the majority of that is obviously in the EV side of things. Most analysts are projecting 2.2 million tons of LCE for passenger cars alone by 2030, which is more than double what we see today here in 2024. As well, EVs tend to get a lot of attention right now in the media, but we do see other sources of demand being generated. E-buses, e-trucks are some perfect examples where, again, they're going to consume a lot more lithium input for their battery requirements just due to the larger masses that they're moving. But an interesting one, again, that we're keeping an eye on here is battery energy storage systems in general. And this is largely due to the amount of solar that's been sort of exploding here over the last 10 years in terms of installation capacity that's out there. A lot of that solar today does go to waste. Again, peak production is happening during the day when peak demand isn't there. So we really are looking at battery energy storage systems as that solution to, take that energy that's created during peak production hours and be able to discharge or be able to deliver it during peak demand hours, later on in the afternoons when everybody's home from work and requiring that energy draw. So that's one thing that we're really keeping a close eye on. As well, we continue to see good government support and the continued push from North American governments in general for the push for electrification. So I think all of these things combined together will keep the demand there, and we really see DLE specific projects as an opportunity to capture some of that supply.
Well, let's hone in on the EV story a little bit. And maybe if you could touch on the hybrid side of things as well, because that industry is also advancing. Is lithium used on the hybrid end? And when it comes to pure EVs, what are the projections you're seeing at the moment? Because as you mentioned, there's a lot of governments putting forth legislation, helping support the lithium industry. how realistic is it that we could see, internal combustion engines? Are they going away in your mind? There's just been a lot of hype. So I want to separate hype from reality and get your thoughts on the EV market and what your thoughts are on the hybrid side of things as well.
Yeah, I think overall, again, the push is there, and the automakers have committed to phasing out internal combustion engines. You even look at some of the government requirements that we have here in Canada, where again, all automobile sales going forward, I don't have the date off the top of my head, but are required to be electric. So I think, again, the commitments are there from both government and from the automakers to continue the push towards bringing, more of a massive adoption of EVs. In terms of the hybrid side, again, I don't have a ton of information on, the requirements for, how much lithium and the batteries, that systems that they have. And whether that is, again, a combination of the plug-in hybrids versus, the hybrids that are charging themselves via the internal combustion engine. But, overall, when you talk about EVs and just batteries in general, again, lithium is one of those key components that will continue to be there. It's the lightest metal. It's a perfect use case for batteries, especially when we consider transportation industry. There's other, case uses as well. We talk about things of everyday life that sort of lithium ion batteries have touched on, cell phones, computers, toothbrushes, tools, toys. I mean, all these different items are helping drive that demand for lithium. And again, it's pretty amazing to see the integration of lithium batteries into sort of our everyday products. Just also mentioned too, just again, going back to that battery energy storage systems, again, I think that is going to help drive that demand when we look at all the renewable energy that is getting put into place as well, just to help, offset those peak production hours and deliver it during peak demand.
Well, you've mentioned DLE a few times, direct lithium extraction. I would like to get some more color on the various lithium extraction methods. This is a quote from the EMP Metals website. It says, the current conventional sources of lithium, hard rock and salars, are unsustainable. Both sources carry high capital expenditures and are environmentally challenging. So talk to us about what makes direct lithium extraction different and why traditional methods are unsustainable.
Yeah, and so when we think of, conventional sources of lithium today, again, those are hard rock mining and salars or brine pond production. And so just to go to hard rock mining here first, again, it's very much a traditional mining operation. Ore is mined from the ground, it's transported, it's crushed, it's refined at a central processing facility to extract the lithium. And when you consider that operation, again, high energy intensity, high greenhouse gas emissions, again, along with all the surface disruption that happens to make that operation work. Salars, again, on the other hand, are these massive brine ponds. Fluid is pumped into the salar. The sun then does most of that work to concentrate up those salts, which again, once that sun has evaporated that water, it's able to then be transported to a central refining facility and processed again to extract the lithium. That requires a lot of time, upwards of 12 months, and requires sort of the ideal environmental conditions, hot, dry weather to allow that evaporation process to occur. So when we look at, DLE and some of the challenges and, some of the other issues with, some of the conventional methods, DLE is a very efficient way for us to extract lithium. We keep everything in fluid. We move it through piping by using pumps. It goes through piping, vessels, etc., and that extraction process happens relatively quickly, almost instantaneously. And so once we extract that lithium, the waste stream that we're generating is essentially going right back down into the reservoir. So we're removing upwards of 99% of that contamination or of the impurities in a single step, which then makes that downstream processing even more efficient, just leveraging conventional water treatment equipment on the tail end. So when we consider impact to the environment, we consider lower greenhouse gas emissions, about 2 to 3 times lower for a DLE operation is what's currently being estimated at commercial scales. And then just the relatively low footprint requirements. Again, no brine ponds, no tailings piles on surface. Again, just due to the efficiency that DLE is creating in those fluids. leaving the footprint relatively small in comparison to some of these other, traditional methods.
I think that's a great segue into discussing EMP Metals. Let's start by getting an overview of the company for those who are unfamiliar.
Yeah, so we are positioned in Saskatchewan, the southeast part of the province to be specific. We currently hold 200,000 acres of land across 3 project areas. So those areas are Tyvan, Manser, and Viewfield. And they represent an inferred resource of about 1.2 million tons of LCE at a 143 milligram per liter average concentration. And so today our focus is really on growing the resource through additional drilling to confirm concentrations, collect more data of the basin, and update resource estimates, as well continue to acquire our land or expand our land package with additional mineral title through either public land auctions through the government or acquiring freehold through private landowners. And we are also continuing to advance our detailed engineering work. And so that is both on the surface refining equipment, as well as working through all of our pilot programs, flow testing programs, and just continuing to de-risk the project in general. We are targeting a reservoir. It's called the Duperow. It's relatively shallow in comparison to some of the other brine plays in North America. So we're roughly at a depth of 1,800 meters. And again, we currently are sitting on, in our Viewfield property, we've identified the highest lithium brine concentration to date in Canada at 259 milligrams per liter. So pretty proud of that accomplishment as we work towards, further developing the overall sites.
Could you shed some more light on the jurisdiction you're operating in, Southeast Saskatchewan? You're located close to many other lithium projects, and it looks like you have some great infrastructure in place. Could you walk us through those details?
Yeah, I think to sum it up, I mean, in short, there's really no better place to be developing a project here than Saskatchewan. It's a very mining friendly and resource friendly province to be operating in. We're centrally located again within North America to open up to markets in the U.S. Good rail infrastructure, good roads, highways, et cetera, and really built off of a 50-year oil and gas operating history in the area that we're operating in. So we're basically in the middle of the Bakken oil field. And again, this oil field has been in operation for over 50 years. And so what that brings with it is 2 city centers close by, all the service businesses that have been servicing the oil and gas industry. And again, with this DLE operation being so similar to how oil and gas works, we get to leverage all of that existing, infrastructure, businesses, workforce talent, et cetera, to help develop this project. Other things too, as well, within Saskatchewan, a very favorable royalty structure. So we're currently sitting at a match royalty with the potash royalty structure, which is 3%, with other incentives on new mines getting a royalty-free holiday for 2 years. Other things with just mineral title and permitting, it's very clear just based off that oil and gas history here in Saskatchewan. Again, 90% of our mineral title is held through Crown, which makes the payment of those royalties relatively easy and efficient, just paid straight to the government, with again 10% of our land being freehold, which are more private landowners or larger oil and gas businesses that acquired mineral title for their oil and gas operations, and have large blocks also of the brine mineral title as well. And so again, almost more importantly as well, good provincial and local support for the development of these projects. It's a large contributor from a mining perspective or oil and gas perspective to the local economies. And the recently re-elected provincial government, they released some new critical mineral programs earlier this year to help provide additional royalty tax credits for new projects and new research type projects, specifically for lithium.
That sounds like a very favorable setup. Could you walk us through your projects in some more detail, maybe with a focus on Viewfield, because I know it has a PEA done for it. So if you could walk us through those numbers and just any other highlights regarding your projects that you think it's important for people to know about.
Yeah, so again, Manser, Viewfield are sort of our main focuses today. Viewfield, again, being the primary focus, again, with that PEA that was out, largely due to those concentrations upwards of 259 milligrams per liter that have been discovered in the Viewfield area. Both properties, again, shallow drilling depths, excellent infrastructure, essentially power and natural gas at the doorstep for the projected sites. Flat, unobstructed farmland. Again, we're not having to deforest anything. And again, the farm landowners are very familiar with surface leases and the access that the oil and gas operations have been requiring to service their operations. Another favorable characteristic too of our brine specifically is the absence of H2S and oil, which are some contaminants that need to be removed and treated prior to getting into DLE. So with us not having that H2S or oil contamination, there's some significant capital and operating cost savings that we can capture by not having to treat that brine prior to going into DLE. Overall, again, both sites have good rock quality, good porosity, good permeability. We've done some initial flow testing at the Manser property and have had good results there, and then are continuing to advance our flow testing programs here at Viewfield, starting up here this week with our horizontal well that we drilled earlier in August, which again we believe is the first horizontal well drilled into the Duperow for lithium production. So overall, again, just to hit the highlights of the PEA, it was really built around a 23-year project life, average tonnage 12,000 tons per year, and we used a $20,000 per ton flat price deck. The OPEX coming out very competitive globally at $3,300 per ton. And when we look at total cap costs of $570 million US, NPV8 of $1.5 billion, pre-tax IRR of 55%, and a payback period of 2.1 years. Where we get really excited about this project is when we look at our development strategy. Again, those PEA numbers are average across the 23-year project life. But by using the horizontal drilling subsurface strategy, we can target those high-grade zones, again, that 259 that I talked about earlier, and really improve the economics for the first 7 years of the project. So by doing that and leveraging that horizontal subsurface strategy, we can increase tonnage to 19,000 tons per year. Our OPEX drops to about $2,300 per ton over that first 7-year period. So I think we're very competitive on a global scale. And again, a large contributor to that high quality, clean brine, shallow drilling depths, and that horizontal subsurface strategy that we're looking to deploy.
Let's talk about some recent news coming out of the Manser project, a news release that you guys put out that you spud a third lithium well there. Talk to us about what this means for the project moving forward.
Yeah, so Manser, again, we got good results initially on the 2 test wells that we have in the northern part of the property. This is really a step out to prove up the rest of that Manser land base. And what we see potentially happening is this could become its own PEA project or a separate project development area. Again, the focus is still on the Viewfield property as some of the initial commercial facilities and further advancement to scale that production up. But Manser itself, again, could be the recipient of some of those detailed engineering work we're doing at Viewfield could then be moved over into the Manser area to become a second project area for us.
Well, you have plans for a commercial plant at Viewfield that can refine 3,000 tons of lithium per year. Could you walk us through the timeline, when that's expected to be operational, and how that plays into the whole picture for EMP Metals?
Yeah, today, again, we're advancing engineering for that 3,000 ton per year facility through front-end engineering and design study, so a FEED study. We anticipate that to be complete by the end of the year. And so from a timeline perspective, knowing that the engineering work will be done later this year, if we had all the capital to move forward with that project, again, with it being 3,000 ton per year, considerable less CapEx requirement than the PEA numbers are showing. But that, again, being further defined here to a plus or minus 15% through that FEED study work. If we had the capital today, it'd probably be about a 2-year timeline before we're into production. And so that would include all the permitting requirements, the equipment lead times. They range anywhere from 12 to 18 months, plus all the construction, commissioning, and probably before we're at sort of meaningful production in about 2 years. The value creation there is really, the ability to produce and begin to sell a product We kind of see, again, that PEA development being the big picture, but, sort of looking at first steps, how do we, lower that CapEx requirement, de-risk that capital, de-risk the project in general, to sort of a more of a bite-sized piece that we can actually move forward with. And sort of that 3,000 ton facility is really kind of the initial building blocks. That same facility would then be kind of copy pasted through sort of a smaller modular refining operations. Some facilities would have DLE and the conversion at them, but some facilities only DLE only, with pipeline bringing fluid over to the conversion facilities. But again, that 3,000 ton facility really being that initial building block, generate cash flow to help fund the expansion, throughout the rest of that Viewfield property. One, again, thing that we are looking at is even that 3,000 tons, we may be able to actually scale that back even further. Whether we look at that as, lower tonnage output or a different product getting created initially, just to get something built, get DLE operating, prove up, de-risk as much as we can before we start investing those larger dollars. And one of the things that's really going to allow us to do that, I kind of mentioned earlier, that absence of some of those major contaminants, H2S and oil, really allow us to play with that tonnage and not require scale. You see some of these other projects, 20,000, 30,000, 40,000 tons per year. And we feel strongly a lot of that scale is required just due to dealing with some of this additional contamination from conventional oil field brines, which we don't have to deal with. So, those CapEx, OpEx savings could be anywhere, talking with some of our vendors and other industry experts, about 20 to 40% of CapEx, OpEx could be reduced just by not having that H2S or oil contamination in our brine.
Well, I'll end this by opening the floor to you, Paul. Is there anything we haven't yet covered that you think it's important for potential shareholders to know about EMP Metals?
Yeah, I think, again, when we look at EMP as an overall organization, we've built a really strong team. We've got, a long history with our partners at Rock Resources, who sort of identified the initial lithium potential in this province. They've got a 30-year history operating oil and gas assets here in Saskatchewan. So we're able to leverage them and all the embedded contractors that they have out in the southeast part of the province to help, again, create value for our project specifically, as well as do, the subsurface geological work. We have them on a management contract to continue to support this operation, and they have now been converted into a 17% shareholder. So they're with us for the long term. There is an escrow period on those shares as well, which that transaction just happened in August this year. So it's a 2-year escrow for 50%, with the remaining 50% being a 3-year. So again, they see the value long term and are with us, to continue the development of this project. Also, talking about other strong financial backers, Tembo Capital came in. They're a UK mining-based private equity fund. They came in at 20% last year with an anti-dilute clause as well, and put in another $1.2 million in August with the Rock transaction to maintain their 20%. They did an extensive due diligence process. I think it was upwards of 9 months, and very well-respected fund within the mining industry. And again, we touched on it a little bit. I think the movement of some of these oil and gas majors into the DLE space, specifically into the Arkansas Smackover, I think just generally brings a lot of positive news towards DLE and where it's going. Other news with Standard Lithium has signed, DLE tech licenses with Coke. So I think things are starting to really move in the DLE space specifically.
Great. Well, I'll put a link in the description below to the EMP Metals website, as well as social media for people who want to learn more and follow the company. Paul, thank you so much for coming on the show and sharing your knowledge with the audience.
Yeah, no problem. Appreciate it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.